right, welcome to another Arcane concept video, and today we're going to be breaking down volume inversion gap, or gaps, I should say, plural, singular, who cares? Now, this is going to be a concept within the Arcane library per se, or the pyramid concept matrix that I have. And this is probably going to be one of the most powerful concepts that you can ever learn if you are looking to trade. Let's say, for example, ICT concept. I truly believe my library of concept, I release video week to week, diving deep inside of the concept that I have put together over the years. I have been trading now for 7 years, going on 8 years now, with this new year coming around, probably in the next few months. And over the last 5 to 6 years, I have gone in past markets as far as 2016, 17. And I have backtested, gathered data, analyzed the data intensively. And one of the philosophy and one of the perspective that I utilize to be able to analyze data is how can I find concept that can be utilized and build model that can actually adapt to the market long term, meaning that you don't have to overfit that model once you have essentially built it. So if you're building model with a base, and the base of your model does not have something that actually is proven to adapt and repeat continuously, that no matter what market that we're in, whether we have President Trump, whether we have this next upcoming president, Democrat, Republican, it doesn't really matter, that your model will still work. And then you just have to focus on psychology, because if you cannot trust the model, if you cannot trust the concept that you're trading every single day, it doesn't really matter. You're going to jump onto something else. Sorry for that little rant on in the beginning, but I just want to clarify that before we go into this concept. With that said, let's go ahead and dive into this video's VIG, or volume inversion gap. Why is this actually useful, and how can you actually implement this? Well, it's very simple. If you have traded or familiar with the concept of AMD, this concept enhances that or makes it extremely robust, or at least give you a time-based reference as to when, I would say, the low of a high time frame candle, or even like a 1 minute candle or 15-minute candle, but usually the 15 or the 1 hour candle be confirmed. If you're familiar with the AMD concept, you understand that if a high time frame candle, for it to form, we first need to accumulate around the open, pass will be directionless. It will not give you a specific direction in regards to where we're looking to head. However, after that accumulation, we'll have an manipulation, right? Which would take us maybe to a key level, or maybe will be based on some other criteria. Now, with the concept of volume candle, how I define manipulation, or how I characterize manipulation, is based on a specific time. Within the arcane concept, when it comes down to how a candle operate, unfold, and form, it has many things that can influence the formation of that candle. Now, if you're following ICT, you may believe that it is based on a key level, right? So for example, if you trade ICT, you're going to have a strong conviction or strong belief that for the reason why price actually is manipulating here is because we have a key level, right? Price is manipulating down to, and it is the reason why we're looking to attack this level and then move away from that. That's one train of thought, and that's one school of thought. Now, with the volume candle, it takes it at a completely different angle. It utilized time, obviously, and price, but most importantly, time more than price. In this concept, time is actually greater than price, because the arcane concept within the volume candle says that there are specific candle within each hours, within every 15 minutes, that if you identify that, if you just simply focus on that, those will be the specific candle where you can anticipate the manipulation. And these candles are fixed, and I'm going to go over that in the next chart, right? But I wanted to kind of set the stage for the next slide, so you understand that when you are encountering the concept of PO3 or AMD, this phase right here, which is the most important phase to really grasp and actually take this concept and utilize it in your day-to-day trading, is that this manipulation phase right here is typically associated with either some type of sweep of liquidity. That's typically the justification that if you're trading ICT, that you would utilize to justify why we are manipulating. What I'm saying to you with this concept is actually a complete different reason. Now, it could be the reason of that key level. That's why we reverse. That could be one of the reasons. Or it could be maybe because of liquidity, right? Maybe we have a relatively equal level at this point, past sweep that in reverse. And all those things can be true, because there's a lot of concept, there's a lot of pattern in the market that will unfold. However, it's up to you to see the pattern and then find ways to monetize it. Because if you see a pattern but you cannot monetize it, it doesn't really matter. If you cannot organize it in a way where you can objectively take it and then build a model around it, then it doesn't really matter. I wanted to make sure that you understand that as we go and then look into some of the next candle, because I'm going to show you specifically candle that if you see an inversion form of those candles I'm going to show you next during this phase right here, almost guarantee that, and then obviously you have to have the context around that, almost guarantee that it's printing the low or the high of that high time frame candle, usually on a 15-minute time frame or the 1 hour. So that's essentially what volume candles are. It's just specific time. So in the next chart, I'm going to go over that. I'm going to first explain the concept to use. Sometimes in life, it's important to understand why certain things are set in a certain way versus like just what it is, right? So me taking my time to explain and talk about that and take you to my train of thought is to trying to get you to see the perspective and the train of thought that got me here. If you understand that, as you learn some of this concept, you will start to really digest and see some of the information that I explain on a deeper level. But I truly believe arcane concept is only going to be valuable to people that are actually taking the time to work, spend some screen time looking at a chart. Because if you look at a chart and then, so here's the reason why I'm mentioning this, and I'm trying to take my time to explain the reason why behind certain thing I'm saying versus just telling you what it is, right? Have you ever read a book and you read it the first time? You love the story, maybe you love the lesson from the book, and then you experience things in life, maybe after a few years, and you come back, you reread that book, and you just like that book becomes 10 times better. The lesson becomes even more accentuated. Like you can actually feel the lessons much more compared to first read. This is exactly what's going to happen with this concept. The first time we're going to hear about this, you may not think this at some point, but if you actually take the time to simply have more time on the chart, because this concept is not going to be valuable for someone that does not look at a chart intensively. If you're not someone that look at a chart intensively, meaning you're spending time on a chart, you're not going to see the value of these. So I wanted to preface that before I go any further. So the specific candle time are how likely the form confirm the manipulation will begin the distribution stage for a high time frame candle on the 15 or the 1 hour are going to be the following candle. So 15 out of every hour, 00 of every hour, and then 01. So for example, 9:59, 10 a.m., and 10:01. Those would be an example of these right here. Next one right here, let's say if you're looking at the morning session, right? 10:14, 10:15, 10:16. The next one right here, 10:24, 10:25, 10:26. Right here, 10:29, 10:30, 10:31. And then finally, 10:49, let's say for example, 10:50, 10:51. It could be 9:49, 9:50, 9:51. You get it. So these are going to be usually the volume candle that you need to pay close attention to, right? Imagine this is, for example, 9 a.m. that you're looking at. And you could be trading an ICC concept where you have AMD that you're trading, or maybe a market maker model. So price is accumulating here between 9 a.m. and maybe, let's say, for example, 9:45. And then you have a massive 15-minute fair value gap price below price. We manipulated that level. We leave a fair value gap here of that manipulation. Maybe you're waiting for a breaker at this level to form, right? Maybe so you can enter. But before that breaker forms, you could get an inversion here at what time? At 51, 9:51. So if you get that inversion, I don't want you to look at this concept as the be all, right? If you get that inversion 9:51, now you have an early confirmation based on volume candle concept that this trade actually going to deliver. So you can actually start maybe sizing up and adding a position here before maybe you enter your breaker, or maybe if you're entering a RB or like a reclaimed block or other concept that you might be utilizing for your entry. And a lot of the time, if you have a strong context with the volume candle, for me, I have a very, very strong context, my volume candle. So I'll enter off the volume candle for most of my positions, but I have a specific context and I have a specific way of utilizing these. I will not just enter it up right off the bat, right? I have a process to identify this. That's kind of how you want to utilize it, right? You want to pair with maybe an IRL to ERL, and then that's an additional confluence of maybe that you're utilizing. Okay, that could also be one of your entry model for some of your trade, because once pass essentially delivered that inversion here, right, at 9:51, one pass inverts with one of this candle, one of this gap of this candle here, I mean that 9:51 candle right here, imagine if this is a candle right here, bullish candle. And then this fair value gap obviously is a 3 candle pattern, right? But the candle that inverts this gap of this push down here is your volume candle. So either 950, 951, or 949. If you see that happen, then what you have is volume inverse gap, right? So meaning this gap right here, it is going to be extremely solid to hold price to actually move higher towards the next draw or maybe the next internal range liquidity or something of that sort. And then this could be the early level where you can feel confident placing an accumulation trade here, or maybe the first starting trade. So maybe you can have a position here, stop loss behind the swing. And then if you get another confirmation, you can put your full size. Maybe if you get a breaker confirmation above here, and then you can hold the trade to your target. That's how you utilize this, right? You trade this volume candle off inversions. Now, another way that you can utilize it is off a breaker. If I have price essentially tumbling down, we sweep the liquidity, maybe tag a key level here, all the way down here, and then you're waiting for this swing right here to get broken and confirm your breaker. If the candle that breaks past this breaker and confirms it, it is a volume candle. A lot of the time, you will see price once it expands, it will come back, retest this area from this volume candle that confirmed this breaker, and it be served as a strong key zone where we do not break and then keep pushing higher. So these are just time in price and in chart where if you see some of those confirmation of this volume candle, it is telling you that this current 15-minute candle or this current 1 hour candle printing the wick of that hourly or that 15. We're not going to breach this for another 30 minutes to an hour. This level is not going to be disrespected or until we get the next draw. It could do it in a matter of, if you are trading around the open, it's 10:30 to 10:30. If you get an inversion like that, it could move 50 points. It could move 100 points after confirming this, take the draw, and then essentially reverse. And I think that's the reason why a lot of people don't even see these type of volume candle in their tracking or in their analysis, because if all your perspective is thinking about the draw, all your perspective thinking about the PDA that you're entering off, you're actually paying specific attention to statistically which candles are more likely to confirm a 15-minute candle, which candle are more likely to confirm a 1 hour candle. This right here I'm giving you guys, like I say, is golden massive nugget. Go and then look at some of your trade. Go and look at candle. We're gonna look at a chart as well to show you some example. You're gonna be mind blown with this right here. This took me 4 to 5 years to figure it out. I'm giving it out for free. The minimum I will ask that you guys subscribe or comment, right? Let me know what you guys think about this and if you guys want to start actually utilize this in your trading. When I go live, when I'm trading every single day, some of the candles that I pay close attention are this one. I'm going to keep releasing some of these concepts and sharing with you guys exactly what I'm doing, what I'm looking at. And I'm going to break down a little bit more further what I just talked about. So I divided the volume candle into two categories. One that I call prime volume candle and another one that I call secondary. And I'm going to explain the difference. So if I get an inversion or BPR, as I mentioned here, of prime volume candle, I will feel extremely confident that it's actually going to hold stronger towards my draw, towards, let's say, my immediate target. And a lot of the time, since we are scalper, if you are looking to scalp and be in and out of the market, you really want to trade off candle that indicate that we are not going to be in there for a long period of time. So that's extremely crucial. This kind of like extremely, extremely crucial. Please take note of this, screenshot this, and save it. Next up is a secondary volume candle. Now, how do I utilize this? Now, I can still trade the secondary volume candle the same way as the primary, but most of the time, and by the way, this right here, the only time these are prime is off the open. So 29, 30, and 31. The only time these are prime volume candle for me is when we are opening the markets, 929, 930, 931. So these are the only time. But besides that, every other hour of the day or any session, this will be secondary volume candle. The reason why I have a differentiator between those two categories because prime are stronger for initial entry towards your draw or towards a high probability objective. And then secondary are mostly reaccumulation. So if you enter off this inversion right here, and then let's say this is 51, right? I'll pay close attention to, and you probably might see another inversion that gets created somewhere here at maybe 14 or 15, let's say 15. And then price may play around and then reaccumulate again, maybe off 24. So that's kind of how I look at 24, 31. Those are reaccumulation. So if I see this and then our draw is still up here, then I know, okay, if I enter a trade here, let's say I have an enter a trade here and I'm targeting this as my final target, then I know, okay, I can probably accumulate here. This is just telling me that the order flow for my trade is still valid. So I'm using this volume candle to essentially read order flow. I have this set of volume candle here. I have 15, 14, 15 here, and I have 24. Literally, as price is printing in my direction, when price come back and retest some key level, I'm telling you this, go back and look at some of your trade. Mark out those volume candle on the chart. You will literally see whenever you get an entry confirmation, if you just look at this volume candle, it will help you literally map out every single pullback of the market. I'm telling you, this what I'm giving you right now will make you profitable in a matter of like weeks, a month. If you just master this, I'm telling you, just put this on your chart. You will literally see it. If price is delivering from internal to external, this concept right here is how you read all the flow without using footprint, without using any sort of like technical tools. Literally pure technical skill, technical analysis, reading the chart, but with actual institutional direction. And this is something, like I said, it's extremely powerful because it adapts to the market. You do not need to overfit, change, modify, improve, whatever that may be. These are set. Do not change them. Simply take them and place it on your chart. Don't try to be smarter than whatever that has already been put out. Let it take it and place it on your chart and allow some of your previous trade. You'll be baffled by what you're going to find out. Also, one thing that you can do, take it and place it in your chart while you're trading live in the market. Remember what I said earlier. Some of you guys will not take the time to really implement it. Prove me wrong. All right? Prove me wrong. Go ahead and put it in your chart. Prove me wrong and then do it. I want to see you succeed and actually have some success utilize some of these concepts. But I'm telling you, once you get an entry confirmation of a higher time frame key level, literally look at how price print. And then if you see your trade start beginning failing and then reversing on you, you will start noticing that many of the inversion that will confirm or around those volume candles were not actually holding. When price was coming to form that inversion, it fell and essentially flipped the entire gap. Imagine if you have this gap right here, right? At 51. Imagine if price instead of 51 right here, coming in and essentially invert this, right? But we do not invert it at 51. At 51, price does this. You get a candle that respects that gap and then close below. And then let's say that's 49, right? Let's say this is 49. And then 50 does this. 50 gives you another wick body above these and does not close. And then that's 50 right here. And let's say 51 does something like this. Massive candle that closed below that gap, 51. And then you are holding this trade. You'll be very shocked that this was already the sign that this trade was not going to work out. But the volume candle gave you the early indication before some of your other confluence could actually catch up and tell you what was going on. I really, really hope this makes sense. This is what volume inversion gaps are. This is what volume candle are. I already made a video on volume candle, but this is the first time me really breaking down how I utilize it on a day-to-day basis and in my day-to-day trading. So I hope that makes sense. Next up, we're going to jump into the chart and I'm going to show you a very few examples before closing out this quick lecture. I'm not sure if I can say quick because it's been a while now, but I really, really hope you guys are enjoying this. But we're going to show you a few examples and then we're going to go ahead and close this and let me know in the comment section down below as well what you guys think about this. If you guys are interested in working one-on-one with me and learning more of this concept and look at some of the data that I have and things of that nature, feel free to reach out to me on Instagram, Arcane.trade. I'll be happy to help. Or if you have any questions, feel free to reach out to me. I'll be happy to help. All right, very quickly, I don't really want to make this video too long. So I'm going to show you 3 examples, okay? So as you guys are seeing here, this is 9:30 open right here. And we're manipulating back towards this high time frame 15-minute fair value gap, right? Price is retesting this gap a few times, as you can see. So what are some of our following volume candle that we have on here? The volume candle that I mentioned earlier, we have 51, 49 right here. And then we have 51. So these 3 candles right here represent the volume candle. I want you to pay close attention. What are we doing with these volume candles? Are they respecting any gap in regard to the context? So if you're trading from price manipulative down to this gap, by the way, I can jump onto the 15-minute time frame to show you a little bit of what it looks like. So we're currently inside of a 15-minute fair value gap right here, 15-minute BC. Price is essentially manipulating inside of this 15-minute fair value gap. And then we do have some draw above us. We have previous day high that we have. We have an MPL that we failed to grab. So there's a strong chance price can essentially deliver back above us because we do have some draw. But what are some of the things that we're paying attention here? You could look at this breaker right here that have formed, but it's not a unicorn breaker or an arcane breaker, as I like to call it, because the leg of manipulation here does not have a gap. So you could look at maybe other things that support and respect that breaker. So this breaker right here, which is this line right here, or you can highlight this entire line right here. Past retesting that breaker block. Actually retesting that, we're also retesting the 15-minute fair value gap. But as we do so, guess what? This is the first set of volume candle, right? This first set of volume candle is sitting inside of the breaker block. We're barely touching or respecting this 15-minute fair value gap, but it doesn't really do anything. There's really no gap that we're looking to respect here. However, this next set of volume candle, which is 59 right here, all the way till 51, guess what we do here? Past come back down, displace, respect the 15-minute fair value gap, and then we invert right here. So right here, we have our first VIG, right? First volume inverse gap right here. And then what price does after this, let's take a look at that. Once this inverts, this is essentially the first 2 to 3 minutes of the next 15-minute candle, and also the first 2 minutes of the next hourly candle. This is how this current 15-minute candle looks like. I'm going to replay price exactly at where this candle is going to be at. Let's go to the 15-minute time frame. So if I remove everything on the chart, this is just how it looks like originally. We don't have this entire body that you guys are seeing here. When we close and respect that gap, this is all that it looks like. It does not look like anything yet. It's just a wick, right? Once the volume candle confirm that wick, this is what price will do after. See how we never reclaimed that, and we took out this immediate draw right here. And then we got close to our MPL as well. We almost took out our MPL. And then let's take a look at a 1 hour candle. This is how the 1 hour candle looks like. See how this low never got reclaimed. That's what volume candle do. Now, I'm going to show you what the next few volume candle does as well. So we take a look at 14, 15, 14 right here, 15 and 16. What does 14, 15, and 16 do? If you look carefully here, we have a fair value gap again here. What does 14, 15, 16 do? We come back down, respect this, and then eventually 16, we checked off that gap. Remember what I told you, right? If you really look at the order flow with the volume candle, it will respect that order flow and deliver in that direction. So this set of volume candle, imagine if instead of respecting this, we flipped bearish and started closing below. That would have told me that now my trade cannot be invalid. Doesn't mean that my trade is invalid, but it could have told me that we're actually going to have, what could be an indication? I want to see what you guys think about this. What could be the indication if we close below here with a volume candle? I'm going to give you 10 seconds. Let me see what you guys think. If you guys can actually think on your feet based on what I explained earlier. 10 seconds. Thumbs up. I'm counting really fast. Yeah, it may not be aware, but I count really fast. It may not be aware. It would have meant that price actually might be retracing deeper. That's what it would actually have meant here in this case. Could mean two things. We're done with that expansion. This volume candle fell. The immediate PD array associated with that volume candle. Therefore, we might actually retrace either deeper, maybe back to this order block again, or completely invalidate this. So if I'm looking to accumulate on this position, when is the best time to do so? With ICT, it will be the original PD array or a reclaim order block, or a reclaim breaker block, or some type of breaker, right? With Arcane concept, the foundation for accumulation will lie within, obviously, the PD array that we're going to be trading off of, but most importantly, the time-based candles, which is going to be the volume candles. This is how I accumulate, because if past in that order flow, these volume candles are going to tell me whether or not we're going to have a deeper pullback or they're going to be protected level as we deliver to the next. So since this volume candle respected it, I'm checking the next set of volume candle. What's the next set of volume candle? 24 right here, 25, 26 right here. Did we grab the liquidity here? Did we eventually grab this liquidity? At what time did we grab it? We grabbed it a little bit further down, right? This 930 high, which is a strong time-based liquidity as well, liquidity pool as well. If you look carefully, if you extend this, 25 respected the same gap that the previous set of volume candle respected, and then 24 helped that begin the dip to that level, right? We created the high here, dipped at 25, 26, all kind of like rejected off that level, and then 27 essentially push off that. And then we have 28, 29, and 30, 31, all are the candles that took out that high. And then the next major turning point was right after that 29, 30, and 31 volume candles. So that's a little bit of how I tell you, like I say, place it on your chart. Whenever you are having are you placing and entering a position, you will be very much amazed. Look at what they do in terms of creating the wick, the 15-minute candle or the 1 hour. You'll be also very, very, very much amazed. And then, like I say, they will hold, those levels will hold until whatever draw that's immediately get taken out and then complete the formation of that 15-minute candle or that 1 hour candle. I hope this was really much insightful. You guys got a lot of value from this. And this opened your eyes in regards to algorithmic price printing, right? Because this is algorithmic, what I'm explaining to you right now. This is not, just pure technical analysis or pure price action. I mean, it's pure price action, but it's just not pure technical analysis. It's also utilizing a time-based algorithmic price delivery concept, right? Something that you will not find in ICT library. This will be in the Arcane library. Like I say, if you love this, you'll be very much amazed. There are a lot more of the other concepts that I have coming up. But like I say, you will need to watch the chart. Otherwise, you're not going to get the full benefit of this concept. You will not. I promise you that. I enjoyed this. I hope you did as well. I love trading. This is my life. This is what I enjoy doing. I hope you find love in learning to trade. I hope you find love in the process of trading and you build consistency. My hope is that this concept helped you get to the next level and get you to see the light, because I wish someone did this for me when I was coming up. So with that said, guys, I don't have anything else to do. And on this video I'll give, let me know in the comment section down below what you guys think about this and what you start to implement starting today. And I'll see you in the next video. Until next time, please stay in profit and safe. Sign out.